in the participants list are people who've already invested in the business. So I'm guessing you've actually been through the business plan in quite a lot of detail. You may have some additional questions that you would like to ask. And but what I thought I'd do is quickly give you an overview of the business, give you a bit more detail about what's been happening over the last couple of weeks, and then I'll open up the floor, so to speak, to questions. Never done a webinar before, so I don't know if you have, but this is new territory for me. It's all very exciting tech stuff, isn't it? Let's go on. So, as you know, we're here today to talk about Bike Leasing Company. We offer 2-year leases to consumers and businesses, predominantly with premium bicycles. And as an investor, the opportunity that's available to you is there is a way that we can achieve SEIS. That's been confirmed now, that there is a way to do that. It's a little complicated, and we can go into more detail about that separately if you wish. But the main aspect of the business is, of course, SEIS on its own doesn't make a business successful. It has to have a very good proposition that people will want to use in the first place. So what we're doing is we're offering leasing, which is new to the bicycle industry, and Bike Leasing Company is a first-to-market opportunity. We've had a phenomenal amount of interest during this early stage of the business, both in the UK and overseas. So it's been demonstrated that it is a scalable business as well. And it's fantastic. It's a business that I've got a lot of interest in cycling. And as you know, cycling is a growing market at the moment, particularly after the Olympics. And the business is at a stage where we've proven the concept. We've got over 30 bikes leased. People are paying their leases. They're enjoying their bikes. They're talking about getting more bikes when their leases come to an end. And we've had a lot of progress in terms of getting the business from being a stage where people are contacting me directly to lease a bike, to being able to lease through the website now. So we've got an e-commerce ability now through the site. The other news is just in the last week we've been able to get that site onto Google Shopping, and we're seeing a lot of specific inquiries coming in for specific bikes. So I've been talking to a lot of people who are expressing a lot of interest in leasing. Now's not exactly the best time of year to be putting on your Lycra and getting out riding, so the volumes tend to be somewhat low at this time of year, but it all builds up now. People are inquiring now for February, March, April time to get their bikes. Also, what we're doing is creating an opportunity to offer a new channel for bicycle suppliers and manufacturers. It's a pretty, excuse my French, but it's a pretty hairy-bottomed industry, and there's a great opportunity to bring it into the modern world and to offer an excellent service, an excellent customer service to create a lot of brand loyalty and repeat customers. And all that adds up to creating a very valuable business that we together, if you invest, can sell to retailers, to other leasing companies, to financing companies. Would be a lot of there would be a lot of interest, I believe, in the market for a business such as ours. But we need to make the most of this first-to-market opportunity and grow as quickly as possible. So, as a business, why would people want to use leasing? Well, we are solving a problem. And the problem is that everybody who likes cycling, who's into cycling, would like a better bike because it gives them more enjoyment. And if you get more enjoyment, you're more inclined to go out and use it, get better value for that, value for money out of that bike as you're using it, rather than it sitting in a garage, and you get fitter. But of course, better bikes tend to be more expensive. Well, they are more expensive, and some of them can be eye-wateringly expensive. And when something's more expensive, particularly in the current economic climate, you tend to get less enjoyment at home. So there can be quite a lot of fallout, so to speak, when significant sums of money are being spent on bicycles. So we address that main problem. There's a number of other areas, other problems that we solve, but that's the main problem that we solve. And the business model to resolve that problem is very simple. Basically, we're able to buy premium bikes at wholesale prices, and we're able to keep our costs down to an absolute minimum by only buying to order. We don't have the holding costs that retailers have, and we buy as an order comes in. And we are able to pass on a great deal of the wholesale price savings that we get to the customer, so that we're able to make a very compelling case for leasing a bicycle for 2 years, and we make a profit on that lease. Particularly with the relationship with RateSetter now, we're able to release that margin at the point of sale. So as soon as we've sold a lease, sorry, I got tangled in my wires. As soon as we've sold a lease, we're able to release that margin. And during the lease, that margin is small, but the bike is paid for. So what we can do is we can wait patiently for 2 years and have high confidence that in 2 years' time we'll have an asset back that we can sell for at least 35% of its original retail price, or the 35% margin, and all of its profit, because the bike's already paid for. Now, of course, that will only happen if we can back it up with a compelling argument for leasing from for the customer. Sorry, he's jumped a couple of pages there. I'll just So the compelling argument is that looking at the overall cost of running one of these high-end bicycles, leasing is the cheapest and most cost-effective option. I've got another slide. We can go into detail of that later if you wish. The customer is able to get a better bike for their budget. They can now afford premium bikes. We bring the price point down without undermining a brand through discounting. That's one of the main advantages, particularly for suppliers and manufacturers. This new channel gives them a way of offering their bikes to a whole, more broad market without actually undermining their brand through discounting, which they try to avoid at all costs. And for the customer, they also get to avoid that sting of depreciation that you often get when you come to sell a used a used premium bike. The other advantage is we have a good number of accounts with suppliers, and we're able to get trade prices on spares, and also on accessories, and also on upgrades. At the moment we're focusing on spares, but we will also be adding on the accessories and etc. onto the website in a future date. And very niftily, I think, we've been able to arrange an agreement with VeloSure, which is one of the very good bicycle insurance providers, whereby customers can take advantage of the fact that they only need to insure the bike for our exposure to it. which is significantly less than the retail price. So we're able to offer the bikes with insurance at a very, or the bike, they can buy insurance through us. Sorry, they can't do it through us because we're not FSA regulated. They're able to buy insurance. We refer them on to VeloSure at a greatly discounted rate. So typically half or more than half what they would be charged with anybody else. So that all comes in together to create this bundle of savings compared to buying a bike at retail. And with premium bikes, and current model year bikes, you don't get a discount. So that's the main point behind this. When I say don't get a discount, you're not able to go to a retailer typically and get any sort of significant discount on a current model year premium bike. The other advantage for the customer is they remain protected by the manufacturer's warranty. We've got agreements in place whereby the bike is covered by the warranty for the duration of lease plus 1 year afterwards. So we're able to hand over or sell on these used bikes with a warranty, which allows us to secure that additional premium when we come to sell the bikes. And of course, leasing is incredibly flexible. It gives the customer the opportunity not to pay out the whole retail price and hope to recoup some of it at the end, and gives them the opportunity to get a brand new bike every 2 years, or if they fall in love with the bike, they could buy it, or they could buy it and then lease another one. Or it gives them a way of running 2 bikes, as often people run road and mountain bikes together, or triathlon and mountain bikes together. So that's the other advantage of it. And wonderfully, the market is growing. Just to give you some background, the UK market was worth £1.4 billion in 2010, and that's just in bike sales, and 3.58 million bikes were sold in the UK in 2011, which is slightly down in 2010, but is not anything significant. I think it's 3.7 million bikes were sold in 2010. And 1.3 million new cyclists took up cycling in 2010. 500,000 are now frequent and regular cyclists. And of course, with the Olympics, there's an even greater number of cyclists. So the London School of Economics did a report where they were predicting over 1 million new cyclists in 2011-2012. And I think from Sports Personality of the Year presentations recently, I think we can see that that probably is ringing true, with 1.5 million telephone votes, I think, on the night in question. The market, how does it segment? Well, looking at the LSE report in more detail, and I think that's in the appendices that I submitted to Crowdcube with the business plan. Basically, there's 3.7 million as a total of cyclists in the UK, and they're segmented into occasional, regular, and frequent, and family, recreational, commuter, and enthusiasts. There's certain segments that are relevant to us, particularly commuter and enthusiasts, and regular and frequent. And that all tallies up to give us a total UK market size of over 1 million people for us to target for our proposition. And as a value, those people are spending in the order of £448 million at the moment. And that figure in red there, the big red circle, is the percentage of that we're looking to of the total market that we're looking to achieve with this business, which is a very conservative figure, and it's really just there as a sense check to see if it seems to fit with the opportunity. Now, onto the team. Well, at the moment, there's 2 of us mainly involved with the business. The plan is to expand on the team, and we are keen as mustard cyclists. We're mad about cycling, cyclists. We're not so mad about the lycra. I do adore you, but we both get very, very excited when we get the smell of oil and dare I say rubber of tyres. But the sound of chains clinking and cassette ratchets going on bicycles. It's a fabulous sport. It's great. It's a very enthusing activity, and we both really enjoy it. But to give you a bit of background, both of us know each other through Henley. I've got my MBA. Martin is the other chap there who is due to finish his this year. He's just finishing off his dissertation, so he's all the way through really. He's just going through the process of finishing off his dissertation. I've got a bachelor's engineering degree in civil engineering from Leeds University, and I'm a business practitioner in NLP, Neuro-Linguistic Programming. Martin is a chartered marketer and also has a BSc in business studies and economics, and he speaks French as well. And I've had a lot of multinational experience solving operational and strategy issues for all sorts of companies, from financial companies to power companies to food manufacturing companies, a broad set of experiences. And essentially what it all boils down to is I'm a problem solver. And that is really where this business came from. I've experience of running businesses, and I chair Henley Business School's Entrepreneurial Special Interest Group. And Martin is a great addition to the team. He has had some very senior marketing roles in the financial industry. He's also worked for some SMEs as well, and he's had experience working in the leasing industry before, in the marketing role as well. So he's a great asset to have. And the next steps are that we are looking to build to 50 bikes per month during this year, and then go on to grow that to 175 bikes leased each month as we grow the number of brands available, and of course as the message gets out there. There's a lot of further improvements we want to do with the e-commerce site, and we found some really good developers that will work with us on that. Very cost effective, and it's been a godsend to find some good developers at last. And the aim is by 2016 to have an international presence. And what basically we're all here for is for me to put a case to you to say, please, can we have £100,000 to make all this happen? Yes, and that is the main level of investment that we're looking for, is the 100,000 through Crowdcube. We're not looking for any further investment. There's no plans for a second round. And this is some detail of how the money will be used. The overall objective of what we will be doing is to be the first to create a situation where, when somebody's thinking about a new bike, or certainly a new premium bike, the first thing that jumps to mind is, I'll lease it. I won't buy it, I'll lease it. It makes much more sense for me. So the way that we're planning to do that is by these number of different sorry, I'm just looking at the chat there. Is these different approaches. So just to give you an idea, over on the top right we've got sponsorship. We've already made progress with that. We're talking to a chap, or we're in pretty advanced stages actually, just in the last couple of weeks, with a chap called Simon Richardson, who is a double Olympic or triple Olympic medalist, Paralympic medalist, sorry. He's got 2 golds and a silver from Beijing. He's had a pretty dreadful time of it since then. In 2011, he got, sorry, if I take a step further back, he was originally basically qualified for being a Paralympian through being knocked off his bike. And then last year he was knocked off again, and this time it was very, very, very substantial. And he's had a broken back, pelvis, all sorts of things broken. And we're helping him to get back on a bike. We're helping him with a hand bike, and then with a view for him to get onto a full-on bike, with the view to getting him to Brazil in 2016 and competing at Brazil. And he's helping us out with publicising what we're doing and getting the message out there, and trying to get his friends, who are all very competitive cyclists, to know about what we're doing. We want to go to events at the and shows at the NEC and at the London cycle show, at the Excel Arena. There's a number of other events around the country as well, and we'd like to be taking part in events with brand ambassadors, or races, sorry, taking part in races with brand ambassadors. And we'd like those brand ambassadors to also be effectively sales agents for us as well. And there's a number of different things that we are actively doing and planning to start, and the sum total of all of this is that we're looking for the biggest bang for our buck, basically. And so social media and getting people talking about what we're doing and this new way of doing things, and talking about their experience of leasing, is the main way we're doing that. We've had a lot of success in achieving that. We've got a lot more brand visibility than other companies. We've got a lot of brand visibility for very little expenditure so far. So we can make our money, that £100,000, go a long, long way. So that's what we're aiming to do. So I'm going to open up the floor and invite you to ask any questions that you may have. I'm just going to have a look through the chat function here. So has anybody got any questions for me? Was it all too fast, and should I start at the beginning and go again? Hi, Nick. Yes, right. So about the SEIS. Doesn't have any impact on the way the business is run. It does have an impact on the financials, insofar as we would need to run two sets of accounts. The way that we would need to run the business is as effectively as two separate entities. Now, I've been through this with my own accountant, and I've run it past the Inland Revenue as well. And I believe that the chaps at Crowdcube have also run it past their finance people as well. And there are caveats to it, so it's not completely without risk, but there's no reason why this shouldn't work. But the plan would be to have two separate businesses. There's the leasing business, and there's another business called Build to Ride. The objective or the aim would be to have the investment go into Build to Ride, which would be SEIS qualifying. There would be mirrored shares in both Bike Leasing Company and Build to Ride. Build to Ride would effectively be focused on creating a steady flow of used bikes for sale. And to do that, it would market leasing as a way to achieve that. And that's basically how it would be positioned. Build to Ride would also have a number of the added value services that we were planning on doing with bike leasing companies. So those include a bike test centre for us to hold, to be paid to hold on to some of the bikes for the brands, and so the suppliers would pay us to do that, and we would make them available in a very compelling location, which is the Surrey Hills, for people to come along and ride them and test them out before they lease them. Of course, if they didn't want to lease them, then they could go on to buy them. But we think that we've got a very compelling reason for them to buy them. And there's other aspects and added value services that Build to Ride can offer as well. But the beauty of it is that the rate setter agreement with Bike Leasing Company lets Bike Leasing Company purely be focused on buying and selling bikes. It doesn't need funding in it for buying the bikes. It's already funded with the rate setter agreement, so no investment needs to go into Bike Leasing Company for that. The investment can go into Build to Ride for marketing. Yes, it would. If we go down that route and there is a consensus that that is the route that you would like us to follow, then yes, it would mean that we would need to change the pitch slightly, and or put an update on there saying what where the investment would be going. And of course, it would be people would be able to state whether it's on condition of getting SEIS. You're welcome, Nick. Hi, Chris. Crowdcube is the main investment source. To date, all the money that's gone into the business has come from our own funds. So my wife's got a big smile on her face. And yes, we've self-financed so far. There's been no money in from banks, or it's all, we're looking to get all the investment in from Crowdcube. You're welcome, Chris. Biggest sensitivity in the business plan. Well, I guess the main sensitivity is if people don't take up leases, the marketing efforts prove fruitless. However, the evidence would be contrary to that. It almost feels, I know it's a feeling, but the evidence and the gut feeling is that if we create this in a broad enough scope, they will simply come in their droves. We're seeing a significant level of interest from the Google Shopping side of things. In terms of risk as well, Nick, on the sensitivity side of things, the risk profile of the business is incredibly low. I've got another slide down here actually that I'll quickly show you. It's in the business plan as well, but effectively we're able to have a very, very low risk profile compared to any other way of offering bicycles as being available to ride, or premium bicycles as available to ride. The period for risk to reduce to zero now actually is zero for us, effectively, because the cost of the bike plus the margin is paid to us at the point of sale when the lease is sold. And of course, the only other risk to us is if a customer was to steal a bike. And we can't get insurance for that. We can only get insurance for every other circumstance. So if the bike's written off, or if it's stolen from the customer, then we're covered. If a customer themselves steals the bike, then it's a theft, and we are protecting ourselves with data tagging. So we call the police and ask them to go and get the bike. That's how it would work. So yes, hello Martin, how do you do? I'd love to get Wiggo as an ambassador. Or I know he's very quietly spoken, but I'd say Cavendish would be a good ambassador as well. Yes, we have sold leases. Unfortunately, the person, one of them hasn't gone through the credit control process. So they're thinking about the other leasing option at the moment. Of course, coming up to Christmas, paying a lump sum might be difficult to do. But we've got also a cyclocross customer looking at a bike, and a folding mountain bike as well, one of the Montagues. And we've got 2 other road bikes as well, a triathlon bike and a road bike. Those aren't secured sales yet, but they are in the pipeline. That's right, Philip. It's chain reaction, yeah. Well, we've spoken to some of Chain Reaction's subsidiaries. They have a number of companies. It's a pretty incestuous world, actually, cycling industry. Chain Reaction Cycles own Decade Europe, and they also own Hotlines, and they are both suppliers of bicycles. There's a bit of well, the retail director's a good friend of yours, is he? They've got a bit of a neat business model going there. They managed to undercut everyone else by being a supplier of bikes. Now, that is something that we are looking to do as well. We are looking to also be to get exclusivity agreements with some very nice niche players in the European bicycle market, who are looking to get into the UK market. So, for instance, we're talking to one very high-end Italian manufacturer who hand make carbon frames and can make custom frames as well. So and we're able to offer that at a very, very competitive price because we're able to cut out the middleman. So that would be that's a very good thing to be able to do that sort of thing. And Philip, yeah. So I don't understand your question, Philip, about heading towards higher end. Heading up the bicycle tree. Yeah, the typical value of the bicycles that we will be focusing on are over £1,000, because that takes it out of the cycle to work schemes, and the leasing model works best with high value. Now we've got a number of lower value bicycles on the site at the moment to A, give customers the option, but B, the plan is to move towards those bicycles only being available on fleet. So they'd be pointed towards companies only. with a view to companies buying, or sorry, leasing, say 20 or 100, 200 pound bikes at a time. We'll also offer that on electric bikes. It seems that electric bikes are particularly popular with companies as well. Yes, each manufacturer has their own guide to bike sizing. Quite a few of them actually don't seem to provide any sort of link on their site to that information. So we have to get that from their manual and scan it and put it on the site. Wherever it's possible, we put a link on onto that page. Although on the site at the moment, I don't think that button's live. We need to sort of switch on that functionality at the moment on the site. That's one of the areas of improvement that we'll be doing. And it's not always accurate, by the way, Martin, either. That's why it would be useful to have a few test centres around the country where people can sit on the bikes. We haven't got that signed, but that's on the list of things to do. So that surplus.com would be the fallback position, whereby if we're not able to sell one of the bikes that comes back post-lease, we'll have a pre-agreed rate with them as a percentage of RRP that they'll take the bike from us at. As an indication that be around about 20 to 25% of the retail price. Are there any other questions, anybody? I have the same problem. It's typing accurately and and quickly. They're not always congruent.
Hello.
Oh, hello. Hello, Martin.
Hello.
Hi. How do you do?
Just my camera. Yeah. As a student of Leeds University, how did you find the Yorkshire folk?
Oh, well, I loved it.
I'm an expat Yorkshireman.
Are you? Oh, I love being called love by everybody.
Down in the southwest. We tell it like it is.
Yes,
yeah, I think I probably asked most of my questions. Just the network of assemblers and delivery chaps. Who are they, and how far? What's the geographical spread?
There's about 10 to 12 of them now, and we're constantly adding them. We tend to have a period of we need to proactively seek them out, and the plan is to have there's a chap called Alf Webb that has a place called the Bike Inn, and he has a very well-respected training program for cycle mechanics. So the plan is to both have a process of identifying people who are already doing it and some new people, and get them all to go through his program, so that we know they're all at a level that we require. So far we've been using about 10 to 12 different people scattered around the country, and they all have varying levels of cost as well, so we're looking to get a steady rate with each of them as well.
Yes, I was looking at comparing wheelies, hire purchase 10% deposit, free delivery 24 months, on a Felt Z100, worked out at 629, and I worked yours out at 681. The main difference being taken up by the £60 setup. There's no option that you can't have it on the drop-down menu.
That's right.
I just wondered if we wanted to sell sort of lower cost bikes, whether there ought to be that option, and then it would be very comparable with the wheelies price.
Yeah, I think the issue there is that because it's a low value bike, so it's an F100, did you say?
Z100, yeah.
Z100, so that would retail, what, about £700?
No,
what was
549.
it? 549. Yeah, so because the whole business model is based on percentages, we're able to buy that at about 275. Yeah?
Yeah.
So because it's bought at 275, 275 plus VAT, we can claim the VAT back. If we were to try to incorporate the labour cost in setting that bike up and getting it delivered and all those costs, it becomes difficult to absorb it within the price. Are you doing a total price
Yes,
over if they bought it at the end?
Yes, that's right. Working on the 35% added on.
So that's where the difficulty is, actually. But at the same time, if they were looking to insure that as well, that's where we would make them a saving. So it would actually cost less with us if they looked at the insurance as well.
Okay, yeah. I'm not saying it's a bad thing to have it set up. It's just some people will sort of look at and compare costs directly.
I think you're right. I think for those cheaper bikes, I think we need to have the service packages set up at cost. So there's no margin in those at all, and that's just volume business. But eventually, those sorts of bikes will need to move really into being available only with customers. No, sorry, companies.
Oh, right, okay.
Rather than, and we'll focus on the bikes that are £1,500 plus.
Are you able to actually give us any figures of any leases signed since the new website came on?
Yeah, we've had, so the new website's been going for about 2 weeks, and we had the Google Shopping's been on for a week, and we've had 2 orders come through, and one of those we've had to bounce back because they failed the credit scoring process.
Right.
So we've offered them option 2, and they're thinking about it.
Very good. I think that's all my questions. Oh, just one thing. Are there any new agreements that weren't in the original Dropbox that you've made?
With suppliers?
Yeah.
Not yet, no.
Okay.
No, but we're looking to we're talking to a company called Posh Bikes at the moment, who do stalk and capping, stalk and skeeping or keeping bikes, stalk and scapping. That's it, stalk and scapping. They're very, very high-end bikes. They're lovely. So that'd be one, and talking to Moda as well. They've been very successful. They do some very nice paint jobs on their bikes, and there's a number that we're talking to. Also, a hand bike company called Strickler, sorry. They're adaptive bikes for people with disabilities.
Okay, thanks very much.
Sorry, one of the things I'm actively doing at the moment is to bring new brands on, and I've been trying to do that as much as possible on the lead up to Christmas, so that over the Christmas break, when people are on the shutdown, I can be adding them onto the system. Any other queries, anybody? It's funny seeing yourself sat there in a video. The things in the background, by the way, are the pop-ups that we had made for the show, the bike show at the Excel Arena last year. One of our suppliers basically let us have some stand space on their stand, so we could put our pop-ups either side of it and hand out flyers. And at Birmingham this year, one of our other suppliers did the same thing. Let us come along and hand out flyers on their stand. So we get a lot of support from the suppliers that have signed up, which is good. What we need to do is continue building on the traction and get up to this 50 bikes a month. It'd be very hard for anybody to say no then to leasing as a way, another channel for them. Oh, you're welcome, Martin. Have a good night yourself. You're welcome, Nick. You're welcome, Chris. You're most welcome. I don't know whether Luke mentioned this, but there's probably going to be a recording of this available on the pitch online as well, if anybody wants to look at it. might also, if people are still interested, be useful to look at this as well. Where is it gone? So this slide is an additional slide that I put in that was about really what is it that makes leasing the most or the cheapest option for people, and what we need to do through the marketing plan that we're doing is get across to people how simply buying the bike isn't just the only cost to consider, particularly if you want to keep it safe and protect yourself if it's going to if it's potentially going to get stolen or anything like that. So as well as the cost of having the bike in your possession, just to ride it whenever you want, so buying it or paying for it or doing finance on it. There's the insurance costs, repair, replacement, worn parts, costs of accessories and upgrades, and the cost of depreciation. And so looking at the costs of having the bike in your possession, the reason that it's the cheapest option is that basically the fact that we can buy the bikes at wholesale prices means we don't, and the fact that we buy to order means we don't have additional costs that we have to build into the business like a retailer does. So we're able to pass on the majority of those savings onto the customer with a 30% saving on the cost over the 2 years. And if somebody was to take up the lump sum lease, then they would make even further savings as well. And the insurance, I'd explained before the insurance, but there's some figures for you. So 10 to 13% is the typical price, and 4 to 5% is what we are able to charge the customer. We're able to get very competitive labour costs because the customer pre-buys them, and can pass on savings from our trade accounts for spares, accessories and upgrades. And in terms of depreciation, the leasing customer can avoid having to finance the depreciation in the first place because they don't pay it. And they can decide if they want to pay it at the end, basically. And they don't have the hassle and worry of trying to recoup that money at the end. If they've had to, if they buy it, that's what they have to do. And they also, of course, have the hassle of strangers coming knocking on the door, looking at their bikes and saying, I'm going to only give you this amount for it, and rather than the amount that you are actually asking for. So a lot of time wasters sometimes. That's pretty much it, I think.
How you doing?
Hello, who's that? Hello?
Hi Paul, it's Luke.
Hi Luke, hi.
Well done, very impressive. I'd just like to remind everyone that there will be a recording of the webinar, so we'll make that available to you all, and we'll try and get it uploaded onto Paul's CrowdQ pitch as well. And I'd like to just thank you all for attending. And if you could fill out the feedback forms when you exit the session, that'll be most appreciated. So thank you to Paul for running the session, and thank you to all the investors who turned up and the questions that you asked. Excellent.
Okay. Thanks everyone. Thanks for your time. Have a good evening.